Hello, everybody. It's John Browning with the Building Your Life podcast. Once again, coming to you this morning. Actually, it's morning, so now you know what time it is. We have Kelly Augspurger. Did I please tell me I pronounced that right? Did I?
You did not, John. You are
Oh,
not alone, though. Almost no one can say my name right. It's Augspurger.
Oz.
Augspurger.
Okay.
Augspurger. Yeah.
All
Yeah.
right.
It's all right. Just call me Kelly.
Kelly is so much easier. Thank you. And
Yes.
so the reason that I wanted to make sure I got you on the Building Your Life podcast is because I'm I personally am dealing with a lot of clients, and I hear this every day of how a great way to blow up your retirement plan and the life that you've spent so much time building is when things don't go as planned, and they often don't. And you, Kelly, are a long-term care expert. I don't know anybody else in my sphere that focuses on it like you do. And I wanted you to, first of all, just introduce yourself for us. Tell us the best way to contact you, real quick, because I think a lot of people are going to want to chat with you after this.
Yeah. So, like you said, John, I am a long-term care insurance specialist. And so I focus my time in helping families, actually, and often through their advisors, their financial advisors, plan for the future, plan for future extended care. Extended care is another term for long-term care, a little nicer on the ears, if you will. But yeah, that's my goal, is to really help protect family and finances by planning, knowing that if I need help in the future, you know what, we've got a way to not only pay for care, but also to protect my family. My husband and I have an insurance agency in Westerville, Ohio. It's called Steadfast Insurance. And so that's where, I am focusing my time, but I work all nationwide. I'm not just in Ohio. I work across the nation, helping clients and their families plan for the future. Best place to find me is either on LinkedIn, and I'm sure you'll have my name spelled in the episode, or our website, which is steadfastagents.com. Those are great places to reach me.
All right. Awesome. And those of you who listen in on a regular basis, you know the best way to reach out to me is at guardianrockwealth.com in the contact us section, or by texting the word life to 321-421-5213. But let's jump right in here, because when we first met, which has not been that long ago, when we first met, you had a really interesting story as to your why. And the book Build a Life, Not a Portfolio goes into, that's where we start here at Guardian Rock, is we start with, well, okay, so you've told me what you want your life to be like. Why is that? And I find that to be so important. And you've got a really interesting why to your story. Tell us a little bit about that.
I do. I often get asked, Kelly, why in the world do you work in the LTC space? Like, it's just a little odd. Like, why would you do that? This is why, John. Lot of personal family experience in this area. So all of my grandparents needed care, either as they aged or all of a sudden due to an illness or a condition. And so we experienced what that was like. And it was not easy. It was very difficult. I was a part-time caregiver to one of my grandmas the last couple of years of her life. And so, that meant I gave up time at work. Fortunately, I worked for my dad at the time, so I had flexibility in that. Not everybody has that luxury. But, what does that do to the family? They didn't have long-term care plans. They didn't have long-term care insurance policies, and those are different. And we'll talk about that. So because there wasn't a plan and they didn't have a way to pay for the plan, that meant, guess what? It falls on the family. And so financially, physically, mentally, emotionally, there are these burdens. There are these consequences that come with that. And so it's really my goal to help families. Let's mitigate that. Let's mitigate those consequences to your family and to your finances. Let's come up with a plan so that if and when you need care, guess what? You have had these conversations with your family. what you want to do. Now, does that mean it's going to look exactly like what you envision? Like, no, like it's still going to probably play out a little differently than you had thought, but at least you've had this baseline discussion. You have like a baseline plan of what you want to happen. And you've talked about your preferences, and they know how you're going to pay for care, where that money is going to come from, right? And you have an estate plan, which is so important as well, along with a long-term care plan, is having an estate plan and having those documents. So yeah, that's essentially, those are all really, really important things.
Yeah, so you've lived it.
Yeah.
My wife ran two home helpers agencies when we lived up in Chicago,
Mm.
and we saw it all the time, right? It would,
Yeah.
the different things that would happen. Some people were really well prepared, and one of the sort of excuses in air quotes that I get for not getting long-term care insurance is, oh my goodness, the paperwork is so hard. Well, the agency will typically fill out that paperwork for you. My wife was doing that all the time, and since it's what she did, it wasn't that big of a deal for her, and
Sure.
she knew the boxes to check and the things to say and all that
And you're referring to when you to get a claim approved,
to get a
correct?
claim
Yeah.
approved, right?
Yeah.
And that kind of brings us into a topic I wanted to ask you about too, because I'll get a lot of reasons why people just don't believe that long-term care is a good way to go. And one of those is, I've heard, right, all these things that I've heard about, and some of them admittedly were true, are not so true anymore in the long-term care space. So what are some of the things that you hear on a regular basis, like the one I just mentioned? It's too hard to get a claim. Even I'll pay all this money and I'll never be able to file that claim. What are some of the things that you see or hear, and what do you have to say about those?
Yeah. So as far as objections of, why I don't want to do long-term care insurance, certainly we hear these objections. So I'd say one of the first ones is, what I've heard that people are getting rate increases on their policies, right?
Yeah.
I don't want these huge rate increases on my policy. Like, I don't know if I'd be able to afford that. Well, rest assured, policies issued today, and I'm speaking of traditional policies, standalone long-term care insurance policies. There's not a death benefit. There's no extension of benefits. It's just simply insurance. Okay. Yes, these policies have a potential for a rate increase, but the chances of a rate increase are much, much smaller today than they were years ago, John. And the reason is we have so much more data now. The carriers are able to price their products more accurately because they understand that, guess what? Clients are holding on to their policies. We have less than a 1% lapse ratio in our industry, which is unheard of in any other insurance product. That means that over 99% of people are keeping their policies and not dropping coverage. So that's a big deal. I mean, the carriers made assumptions that those lapse ratios would be much higher. So that affects how they price products. They also didn't know people would go on claim and be on claim as long as they were. And so not having accurate data skews how much it's going to cost to buy a policy. So now that we are, over 30 years into the industry, actuaries have more data so they can price these policies more accurately. And so, I share with my clients, if we're looking at a traditional policy, these are not guaranteed to stay the same forever, but they are stable. I mean, don't expect a rate increase next year, like that's unreasonable. But if if you're only 40 now, could you have a rate increase by the time you're 70? Maybe. But actuaries tell us if there's a rate increase, John, maybe it's a 10% chance of a rate increase. So it really, it comes down to how old you are now, but know that there is a chance, but it's slim. So I like to tell my clients, let's assume the actuaries are wrong and it goes up 20%. Is this still affordable? Okay. Will this still fit in your financial plan? Worst case scenario, if you can't afford premiums, you can reduce coverage so that it is affordable. Okay. So that's the first one is these premiums are going to go up and it's going to be awful. And to that point too, we do also have policies that sometimes they're called hybrid, linked benefit, asset-based. These policies, those premiums are guaranteed to stay the same. They will not change. So if you do know people, or if you are concerned about that, there are guarantees there. You can even get a return of premium rider on a traditional policy to make sure that you get money back if you're concerned about that. Something else that I often hear, yes, the claims. Like, oh, it can be just so tedious and difficult to get a claim approved. And what if they don't approve me? Well, so here's how it works, John. When we have a qualified long-term care insurance contract, there's contract language, right? It's a legal document. In order to receive benefits, you need help with 2 out of 6 activities of daily living, or you need supervision because of a cognitive impairment, okay? And your expected need of care is more than 90 days, okay? You fulfill your elimination period, which is your waiting period, the amount of time that you're self-funding before care begins.
Ooh,
Yes, we can
real quick and let's talk to people about what that elimination period is.
Yeah,
understand that.
Sure. So we've got the trigger 2 out of 6 ADLs or cognitive impairment. Check. My expected need of care is more than 90 days. Check. Third thing, elimination period. This is the waiting period. It's like your deductible for your car insurance, your homeowner's insurance. Instead of a dollar amount, though, it's a amount of time. So typically, we often see like a 90-day elimination period. And that means you are paying for care out of pocket until benefits begin. Okay. And so sometimes we can tweak that and make it shorter, make it longer, just depending on the carrier and the policy. But that's pretty standard, is 90 days. Okay, we meet those things. Guess what? We qualify for benefits. The carrier has to pay benefits if we meet that contract language. Now, is it easy? I'm not going to say it's easy, no, because there are steps throughout the process. You just need to follow protocol. So I think one of the biggest hangups I see, John, is that when people aren't able to get a claim approved, it's not because they don't qualify for coverage. It's because typically their medical records do not document well enough their need for care. That's really a huge problem. And so what I tell clients and their families, come claim time, when you do need the care, your family member needs the care, before you even submit a claim, those medical records are so important. You need to make sure that you have effectively communicated with the doctor exactly what's going on. No sugarcoating it. This is not the time to be brave and bold and, oh, it's not that bad. No, like, what's really going on at home, right? What do mom and dad actually need help with? We need to tell the doctor. They need to document it in the medical records, because the carrier, the insurance company, is ordering those medical records, John. They're looking, that's how they're verifying that you need help, right? They're not just going to take your word for it. They have to see documentation. So they're going to go to your doctor's office and get those records. So those records have to clearly not be griped. They have to clearly state, oh yeah, like, Mr. Smith, he needs help. He needs help in the shower. He needs help transferring. He needs help with this and this, so that it's just very clear.
Yeah.
Okay.
And I would say, especially these days, if you've got a good primary care physician and you tell them, you've been talking about this, I'm not, it's not safe in the shower anymore. I can't reach back, because my shoulder, whatever, to comb my hair, whatever it is.
Right.
They know that they need to document these things right in those documentations, so that the insurance, and this is not an unusual thing, right? But to your point, especially, okay, I'll raise my hand here. I'm a guy. I never, look, it does that in Zoom for me now. So I never want to tell the doctor, that I have a problem, right? My wife's always on me. She's a nurse. And so she's always on me for that. And this is something that is not the time. Like I said, it's not the time to be brave and bold. This is the rest of your life. It's the quality of your life. You've got to be honest with what's going on with the doctor and have him document those things. Absolutely.
That's exactly right. So if we have proper documentation and you're filling out the paperwork, and you don't have to do this alone. Like if you're a client, you don't have to do that paperwork alone. There are companies that actually specialize in the claims process, and they can help you. So whether that is like an independent organization where that's what they do, or there are even like home care agencies that will do it and do it really well, where they've got a process, like you said, like your wife did that, right?
Yep.
There are national home care agencies that's part of their process, is they will from start to finish do help you through that claims process, so you don't have to do it alone. So it doesn't have to be such a huge task on your shoulders. You can get help with that.
Mm-hmm. Yeah, and I remember listening to the phone calls because I would help my wife in the business. I would listen to the phone calls because every once in a while, like an insurance company would say, yeah, we don't think that this was filled out right, or we don't think this is right. Well, if you've got a good advocate, boy, she
Yeah.
would get on the phone call with these insurance companies, and within 15-20 minutes, they'd be like, oh, okay.
Right.
Because she knows
Yeah.
the language. So important to
That's
have
it.
an advocate, somebody who does it every day, like you
That's
in the long-term care insurance space.
That's right. That's right. I don't specialize in the claims process and helping claims get approved,
Right.
but I'm on the front end and helping people secure coverage. But yeah, there are many people out there that can help with this process. So I highly encourage people to take advantage of those types of services that are available. So yeah, I think the claims process, it doesn't have to be as hard as you think it might be. Use someone to help you in that process, a professional, to make the process easier. Another thing that I think people can get kind of held up on, John, is what if I pay these premiums and I never need to use it,
Oh yeah,
right?
for sure.
Okay, so there's a couple different things to consider here. Number one, so we really have two main types of long-term care insurance. One briefly talked about both. Traditional, it's pure insurance, no added benefit if we don't need care. The second, hybrid policies, where it combines long-term care insurance with an added benefit. That's going to be a death benefit from life insurance or cash value from an annuity. Okay. So with a traditional policy, these are going to be less expensive than hybrid policies because it's just insurance. There's no other benefit, right? It's a cost-effective way to get coverage. Now, for my clients that, are concerned, if I never need care, I don't get anything out of it. I remind them, listen, you pay car insurance, home insurance, health insurance, right? We pay lots of other insurances, and we don't get mad when we don't have a claim. We don't get mad when we don't have a fender bender and want our money back, right? It's no, like you had meaningful coverage and you didn't have a claim. Like that's something to celebrate, right? And not getting mad that I don't get anything out of it. But for some people where that is a hang up and it's not enough for them, we do have a return of premium rider that we can add to a traditional policy. And then we have those guaranteed death benefits in a hybrid policy so that you can get something, if you don't need the care. But, those traditional policies, it's the most cost-effective way to get coverage, even if you actually don't need care. So yeah, I think those are the three big ones that I hear.
Yeah, so one of the ones that I've heard too, and this is a tough one to answer, right? Because I'm kind of in this age category, I think. I'm going to let you tell me. But as you know, what's the sweet spot as far as age goes, cost of policy versus how long I'm going to have to pay before? I mean, if somebody's in their 30s, is that a good time to get it? Or somebody's like me and they're hitting their 50s, are they getting too old to maybe get a policy, or is it going to be real expensive? Can you kind of go into?
Yeah, good question. Yeah. So when we're looking at coverage for long-term care, health and age are really the most important factors in securing coverage. We need to be healthy enough to qualify, and the older we get, the more expensive it is. And the less healthy we are, the more expensive it is, or the less options we have, or potentially we might not get coverage because maybe, we would get declined. So those are factors to consider when looking at coverage. So when is the best time? I always say the healthier and the younger. But typically, John, most of my clients are in their 50s. And the reason is at that point, most of them have done a good job. They've worked on saving and investing. typically kids are grown or mostly grown at that point, maybe off payroll, if you will. And so their expenses are a little bit less in that area. And they already have, their life insurance, their disability income insurance, those are already handled. And this LTC, piece, this is kind of the final thing that like, okay, we really need to get this, handled. We need to get this under control. Yeah. Also, at that point in the 50s, many times people are like in that sandwich generation where, you've got kids, but you also have parents who might be getting older and needing help. And so you're seeing the realities of mom and dad need help and I can't provide that help. How are we going to pay for this care? What are we going to do? And so for them, it's a very real subject and it hits close to home because it's like, oh my goodness, I don't want to do this to my kids. I don't want them to have to quit their job, move across the country and to provide care for me. Who's going to provide that care and how are we going to pay for that care? So yeah, typically 50s, but I'll tell you what, I've got clients in their 40s to their 70s, John. So there really is a wide range, but just know the younger you are and the healthier you are, the less expensive and more options you'll have.
Right. And that's what, I spend so much time talking about, in the overall financial plan. That's what I focus on, the financial plan and the money management of things. But in the overall scheme of things, we build a team of people like yourself in the long-term care space, maybe a property and casualty, and then an estate planning and a tax planner. And then I focus more on the money management side of things. But in the overall thing of this, and I know we kind of touched on this at the very beginning, but like, what's the average cost of care right now when you go into long-term care? And I read something, it's been about a week ago. You tell me if this is accurate or not, but if you're roughly in your 50s right now, you're just hitting that spot, you have a 7 out of 10 probability of needing some type of long-term care over the course of your life. Is that about right? Or is that awful?
Yeah, so that statistic is used a lot, John. And I would say, so, they've done studies on that. 7 out of 10 might need some help, some sort of help. Okay. That doesn't mean 7 out of 10 people would be able to use their long-term care insurance policies because obviously language is different. Maybe that 7 out of 10 people might need, again, some form of care. Maybe it's, I need help with meal prep. Maybe it's I need help with laundry and homemaker services. I might need transportation. I might need, those types of things. Maybe it's not I need help with activities of daily living or supervision for cognitive impairment. So, maybe it's closer to half might need actually to use their long-term care insurance policies. But beyond that, like how much does care cost? It's really going to depend on where you are in the country. So to give you an example, so I'm just outside Columbus, Ohio. In Columbus, it's going to be different than the coast. If you're in California or you're on the East Coast, like if you're in New York, it's going to be more expensive, right? It's going to be more expensive there. But like in Columbus, Ohio right now, just median cost of care for home care, and this is for like about 44 hours of care per week, it's about $5,000. Okay, median, middle of the road. If you're looking at assisted living, it's probably about that too, maybe even a little bit more. And then if you're looking at like a skilled nursing facility or a nursing home, like a private room, you're in the 8s to 9s. Okay, so obviously it's more expensive, but nursing home, that's the last stop. So when people hear the word long-term care, John, and I want to make sure this is crystal clear. LTC, we're really not talking about nursing home. It can be nursing home care. It can be. But most often, it's not. Most often, when people need care, it's, I need some help throughout the day doing these activities of daily living, transferring, toileting, bathing, dressing, eating, or continence. Okay. Most people start to receive care at home. So if I want to stay at home and I want to stay in control of my care options, how much does that cost? So if we can kind of build around, those home care costs and the assisted living costs, because that would be maybe second preferred. Again, nursing home last on the list, right, of where people want to be. we can come up with something that's meaningful and affordable. I think it's also important to know that typically when we're creating policies and I'm designing policies, we're not covering 100% of the expense. Number one, we don't know how much care you're going to need.
Right.
We don't know what your expenses are going to be. We don't know if you're going to need 24 hours of care a day for 4 years, if you're going to need 2 years of care for 4 hours a day. Like, we don't know. We don't have that crystal, magic 8 ball. But if we can talk about, and this is what I do with my clients, John, in my educational meeting, is we talk about, family history and personal experience and preferences and finances and concerns and just all these different things after I've already pre-screened them for health to make sure they're insurable. That gives me a good idea of, okay, what kind of policy would be meaningful and affordable? We're gonna do that. And so it's oftentimes a combination of, we have a policy, but then we're also, anything above that, we're going to be co-funding with our savings and our investments. Right. But at least if we've got this designated bucket of money that we can count on, knowing, okay, today, right now, I've got $4,000 per month for 4 years that I'm guaranteed to have. And that's going to grow over time because I'm going to put inflation protection on there. That's great. That gives me peace of mind and predictability. And then in the future, if I need more care, even beyond to what it's grown, you know what? I'm going to pull money out of different buckets of money to be able to fill in that gap. Right. And I'm sure you probably do a combination like that too, John, right?
Absolutely.
Yeah. It's not, I'm not probably going to buy a policy that has a $12,000 monthly benefit for lifetime benefits. Like, it's not realistic. It really isn't. It's usually unaffordable and just over the top. So, let's come up with a policy that's meaningful and affordable. And that's going to be different for everybody.
Yeah. And we talk so much about that here at Guardian Rock, because we start with, what is your best life? And then why is that your best life? But then we talk about later on when the realities of aging take place. Mm-hmm. Well, I want to travel, right? Okay, great. When you first retire, you're probably going to travel, and we want to plan for that and set up our sequence of returns, right? So that the cash is available at the proper times and it's not taxed like crazy, right? We try and mitigate that. And then there's that next stage where you're slowing down a little bit. You're still traveling, but not quite as much. And then there's that next stage where maybe you need some help around the house or whatever. And that's where that long-term care comes in. And we plan for that. And a portion of that is very, very helpful to have long-term care insurance. And like you said, this has been, goodness, we sold that Home Helpers business 8-9 years ago now.
Okay.
And at that time, we had some clients that would pay us maybe a couple thousand a month for just a little bit of care. We had other clients that needed 24/7 care. They didn't want to go to the nursing home. They wanted to age in place.
Right.
That was 9 or 10 years ago. And this was in the Chicago area. They were sending us checks for $10,000, $12,000 a month. And again, inflation, that's likely higher now.
Right.
And down here where I am right now today in West Palm Beach, even higher because it's on the coast.
For sure.
It's in Florida. And planning and preparing for at least mitigating some of that expense and making sure that this is the other thing I just wanted to touch on. It's not something we like to talk about, but if you're, say, my age and you're in the sandwich generation, right? Like, my dad is older and, at some point he's likely to need some kind of care. Mm-hmm. Do I want, or does my sister want to be helping him take a shower?
Right.
No. I don't think so.
No.
Would he want that?
No.
Not at all.
No. Yeah.
This allows the possibility of somebody else doing that for him, and you as the kid, right, the child, being able to maintain that same type of relationship they had. And I can't stress that really enough, because relationships are everything, right?
Yes. Yeah.
You want to maintain those.
Absolutely. Oh, I'm so glad you brought that up, because that is one of the top reasons that families and people really should consider long-term care insurance. It's protecting the family. I think oftentimes, particularly financial advisors, I'm not you, Don, but I think some financial advisors, they focus on the money. Maybe we could just self-fund. We've got enough in assets. We could just self-fund. Okay, let's think about this. Is that really the best play here? Even if you have $5-10 million, is that still the best scenario? Let's play that out. Okay. You've got $5-10 million, but if you need care, okay, what's going to happen? Who's going to provide that care? Are you just going to write a check for that? Whoever's writing that check, if it's your spouse, if it's your child, are they going to want to write a check for $10,000 a month, whatever it is in the future to pay for your care? Are they going to skimp on care because they're trying to preserve? I mean, it's a realistic thought, and it happens that we want to preserve, we want to preserve, we want to preserve. So having a policy, it gives freedom to the family to just, guess what? We have funds for that. Right? We have a designated bucket. We don't have to worry about drawing down mom and dad's estate. This has already been planned for. It's scheduled. Here we go. Right? Use the insurance company's money. Right? So there's that component, but yeah, it's protecting the family. It's protecting the integrity of those relationships physically. Right? So they don't have to provide the care. You can hire those professionals, but maybe it is a combination of family and professionals, maybe part-time family. Maybe it's a couple hours a day, right? Maybe a spouse can do that a little bit of the time, but all the time, it's probably unrealistic. But then stress, right? Mentally and emotionally, being a caregiver is so hard. There's such a huge caregiver burnout, John. And I know you know this because of having previously a home care agency. And so seeing the toll that it takes on families when they're trying to provide this care, it's exorbitant. I mean, we see caregivers who then, they're providing care, then they shortly after need care themselves. And I've seen this in my family multiple times. It just tears down their health physically and then mentally and emotionally. And then of course, financially, right? We're protecting our family from the financial component. I think other things to consider, John, when thinking about a policy and even reasons people should consider a policy is that it provides leverage, right? So you put in $1, you get a multiple of dollars back. It's just pretty simple. It's insurance. It's how it works, right? You're transferring that risk, but you're transferring consequences too to the insurance company, and you're able to avoid tax consequences. So long-term care insurance benefits are tax-free. Okay, tax-free up to per diem limits. If you have a cash policy, there are like daily limits, but most policies are reimbursement, meaning those are going to be 100% tax-free. On those cash policies, typically, like you would have to have a lot of care in order to pass that per diem limit. So typically that doesn't come into play. But, you don't have to worry about like timing the market right. Because if you need care, the market doesn't care what time it is, right?
Yep.
You need care and you need money now. So if the market's down, like we think about COVID and the amount of people that needed care during COVID, and they're pulling money out of the stock market, oh my word, right? Market falls. That's a terrible time to pull money out, right? So even like you don't have to worry about timing the market right, because you can avoid those tax consequences and then avoiding having to convert assets to income, right? Like you don't have to worry about paying those taxes because it's tax-free. Other things, we've got guarantees, not predictability. We are guaranteed X amount in benefits. We can look at our policy schedule and see, okay, when I'm 80, this is how much I'm going to have in benefits. There's no and if or buts about it. Like it's a contract. That's what we're guaranteed. And we can be confident about that. And we've got those designated, funds to pay for that. I think something else that's really important that often is just glanced over is that when we have a policy, most policies have other benefits that are included, John. So it's not just, okay, I'm getting a monthly check for my care expenses. No, it's care coordination, caregiver training, respite care, home modifications, bed reservation, a lot of things that you're not getting if you're self-funding your care. And these things are often included with policies. So I think that especially the care coordination. Oh my word. Like
Oh yeah.
I think, right. I think back to like when my grandparents needed care and my parents struggled to just get things coordinated. It's like if they had a care coordination team to call, and say, okay, what do we do? Who do we call? Where do we go? It would have been a lifeline for them and would have really, really saved a lot of stress. So I think that's important. Also, staying in control of care options. You know, Medicaid, sometimes people have to go on Medicaid. And actually, it's the largest payer of care is
Right.
Medicaid,
Yeah.
But what does that mean? Medicaid means you are spending down your assets to very small limits, and it depends on
Very
your
small.
state, right? In Ohio, it's $2,000 if you're a single person.
Wow.
Um, and you can have some income, but you have to spend down in order for them to pay benefits. So that means you are either transferring assets at least 5 years before, because we've got a 5-year look back period,
Right.
or you're spending down. But what does that mean? Even if you do qualify for Medicaid, John, you're not staying in control of your care options. They're
No.
telling you where you can receive care. So,
And how many
we
roommates you have.
exactly.
Right.
Exactly. And now I know like in some states, like in Ohio, we have what's called the passport program. And there are some instances where people can receive care at home and be on Medicaid, but often it's a long waiting list. And you typically have to be housebound where it's like really difficult for you to even leave the house. Like it can be difficult to qualify for. So I just want to point out, like, when we have a policy, we don't the idea is to stay off Medicaid, right? It's Medicaid avoidance is really what it is. And we're protecting our legacy. I think that's my last main point is we're protecting our legacy, our financial legacy, for the people that we love the most.
And wow, I could never have done this without you. So this is amazing. You know more, like you've forgotten more than I know about long-term care. So this has been wonderful. There's a whole lot in this episode. I hope anyone that's even remotely thinking about it, or maybe you haven't thought about it in the past, kind of go back and listen in. Give Kelly a call. Reach out to her. What's the best way again to contact you on LinkedIn?
Yeah. So find me on LinkedIn or our website, steadfastagents.com. To start to see if, long-term care insurance is even right for you. I send my clients a pre-screen link, okay, to answer health questions. Health is important, right? We want to make sure we're applying at the right time with the right carrier. So I have a detailed form. Those answers come directly to me, John. I review them. If I have questions, I go back to you to kind of refine that. But then, I will let you know, okay, yes, now is a good time to look at coverage, or no, maybe we need to wait because something's going on that it might be concerning. So let's give it some time. Yeah.
Yeah. And one more parting thing too is like I don't know, maybe it's a guy thing too, but we all feel like we're going to live forever, right? And then as we get older, we start realizing, okay, maybe we're not going to live forever. Things start not working. My knees hurt a lot more than they used to, or whatever. And just, I would encourage folks at least find out what your options are with
Right.
Kelly, no matter what your age are. And if you have a parent that is kind of in that stage of life where you can see it going there still may be options. You were saying that you have clients that are in their 60s, 70s, and they're still able to get some sort of.
Yeah. So I have older clients as well. Now you still have to be health eligible.
Right.
But we even have creative solutions, John, like annuities with long-term care benefits. So those clients that are not as healthy, maybe they've got, something going on that's not going to qualify them for traditional or hybrid option. Well, guess what? Well, we can have an annuity, but then it actually doubles or triples what you put into it to still be able to have protection. So sometimes I'll do that. And actually, I have a client that had a chronic kidney disease, and we got him approved for annuity with long-term care benefits. So
yeah, you can do that. Right.
yeah. So health is important, but yeah, that's the first place to start is we got to analyze your health. If we're good to go, then we can set up a conversation and really, dig in deep and talk about your family and preferences. And I'll do my fact finding, and then we can talk about options.
All right. And I'm going to have all of your backlinks and how to get in touch with you down below in the description. on you, whether you're listening to this on YouTube or the podcast or on
Mm-hmm.
our website at guardianrockwealth.com. And please don't try and just do this on your own. I know, Kelly, you're like me. You're not like a hard sell. You're just trying to help people
Educate.
get what they need and educate.
Right.
And it may very well not be right for them, but at least they're going to know the answers, right? They're not going to be wondering.
That's right. That's right. Absolutely. And if it's not, if long-term care insurance is not a fit for you, that doesn't mean you don't have a plan, right?
Right.
A basic long-term care plan is you're going to figure out who's going to provide care, where you're going to receive care, and how you're going to pay for care. Maybe a policy isn't funding that plan, but you can still have those conversations with your family, and you can still talk to your advisor on, okay, well, if a policy is not right for me, what buckets of money would we designate to use for care if I need it? Let's talk about that now while I'm healthy and cognizant, and able to do this. And let's get that documented. So when the time comes, we're ready. We're ready for that. I will say too, John, another great place to find me. I also have a podcast, Steadfast Care Planning. So I talk about lots of issues that older adults face. Of course, I also do talk about insurance, but it's not the main thing that I talk about. But I really try to navigate and help people through, okay, as we're aging, what are things that we need to consider? So you can find me on really all podcast platforms as well as on YouTube as well. But Steadfast Care Planning is the name of my podcast.
Yeah, and we'll put that back link down in the description here as well, so people have the link, then go directly to your podcast. Because I'm telling you, all the stuff that we just unpacked here could be unpacked even further, and this episode is just packed full of information from you, which really appreciate your time.
Well, thanks, John. Yeah, thanks for having me on. Appreciate it.
All right. We will see everyone next week on the Building Your Life podcast, either wherever you listen to it, either on YouTube or our website, guardianrockwealth.com, or any of your podcast listening channels.